Good afternoon, everyone. Good to hear you all. Good to see you all. Thank you very much for joining us today. So just as a bit of a background then, so welcome to the first of Crystal's compliance blind spots. Recently, the research team at Crystal has uncovered something that's been hiding in plain sight for a while, actually, a global network of hundreds, if not thousands, of cash for cryptocurrency services processing billions of dollars annually, and many of them operating outside the regulatory frameworks or visibility of regulators. We published our findings alongside the International Consortium of Investigative Journalists, who then sort of built upon our data and really push things forward. Today, we want to discuss some other blind spots in compliance, those risks that we think are understudied, underreported, and underestimated. And we've got some real heavy hitters of the industry in today, leaders in the field who can really help to shed some light into the darkness of financial crime. Um, Not wanting to put any pressure on you, gentlemen, but very much a big deal there. So I'm joined here today by Geoff and Tom. So Geoff is one of the world's leading journalists covering organized crime and technology and has spent decades investigating the shadowy forces of fraudsters, hackers, and money launderers. His latest book, Rinsed, reveals technology's impact on the world of money laundering, and it springs from his work on the hit podcast and book, The Lazarus Heist, which explored North Korea's computer hacking campaign. Hello, Geoff. I'm also joined by Tom, who is the founding director of the Center of Finance and Security at RUSI, Royal United Services Institute, where his research focuses on the intersections of finance and security, including sanctions, terrorist and proliferation financing, organized crime, and alternative financial systems. He also hosts RUSI's Suspicious Transaction Report podcast and regularly contributes to leading media and policy forums, including parliamentary and congressional hearings. I myself am Nick. I am the Chief Intelligence Officer of Crystal Intelligence. I am joined by these giants of the industry and very, very glad to have you with us today, Geoff and Tom. Thank you for joining me today.
Hi, thanks for having me.
So I'm going to kick off today and I'm going to start off with some controversy because we always like a bit of controversy. We like a bit of maybe a bit more features than international relations in the crypto news. So my first question, I think, is to both of you guys, is do you think that annual cryptocurrency crime statistics really matter or have any relevance anymore? And let me just preface this with a couple of my own thoughts. The crime that's recorded in these figures is generally something that starts on chain, as in it started on a blockchain, rather than something that's adopted the chain at a later stage. So if I'm buying illicit substances for cash and I deposit it in a cash for crypto service, there is no record of that transaction starting in cryptocurrency. All I'm going to see is the transfer. The second one is that blockchain analytics itself is typically post-factual. It's something that happens that we detect things after it's actually been taken place. So we attribute a darknet marketplace after it's been founded and discovered. So I guess I'll go to Tom first with this one is, what's your feelings on this? You talk a lot to decision makers and people who have to implement policies. Are they fully cognizant of these risks? And do these reports paint too positive a picture? What do we get right and what do we really get wrong?
Well, Nick, thanks for having me, and it's good to see Geoff again as well. Look, I think the first thing to say is that on financial crime and illicit finance writ large, we don't know what the number is. Everyone has said sort of 2 to 5% of global GDP or whatever that IMF number is from many, many, many years ago. And apparently that hasn't changed. So I think we need to start by saying we don't actually know the size of the problem, full stop. I think in the crypto world, we have an added issue. So I was somewhere yesterday, I was at the Council of Europe yesterday, and I said to people in the audience, people who are kind of deciding on policy and all that sort of stuff, I said, put your hand up if you either currently own or have ever owned crypto. And then I said, put your hand up if you've ever used a blockchain tracing tool. Well, I suspect there were probably 5 people who put their hands up in response to those 2 questions in aggregate. So we kind of have a community who are responsible but don't understand. And we have an environment where, writ large, we don't really understand the size of the challenge. the last thing I would say is that obviously blockchain tracing can illuminate a lot more than one can illuminate through the traditional banking system. There's no doubt about that. But like the kind of proverbial lighthouse, it illuminates something and then it moves on. So you only see what you look for. And I think that's the challenge that the blockchain tracing companies have to rise to, which is we're very sure about what we're looking at, but the unknown, well, is unknown. And therefore, we need to be careful not to be too certain about what we infer from what we see.
Absolutely. I think that's a really good statement as well. Like the known unknowns. I know it's often used to pillory Mr. Rumsfeld, but it is a very true statement. We don't know what we don't know. And I think that's a really good start point to talk about crime in general. And I think, on more specifically on the figures though, and the sizes, there is no comparative measure against, traditional financial crime, if we want to call it that. I suppose it's all financial crime now rather than traditional and modern. I guess, Geoff, like, just your reflections on that. You see these reports all the time. We were just saying the other day about the Bybit hack. It's roughly a year on from the day, 2 days, 3 days after. Would you think these figures still have a relevance now?
Yeah, it's very interesting, and I thought there's a lot in Tom's comments as well about that. I mean, for me, I'd say roughly three things. The first thing I'd say is that we do have private companies, Crystal included, who carry out these reports and look at, criminality and actually do occasionally name specific institutions that have handled illicit transactions, link them back to specific crimes. If you look at the world of traditional finance, I don't think there's a parallel there. I don't see private companies writing big reports and naming big banks in connection with specific crimes. In court cases, yes, but as a sort of private industry. So I think we have to sort of give the industry some credit for that these reports are there and they do cover these things. They're certainly very useful for me as a journalist. Being able to quote a report from a reputable tracing company does help. It's not always, it's never the single source that I need. It's always one of the sources. So there's that perspective to it. Secondly, Nick, as you've alluded to, you don't know what you don't know. And indeed, one of the chapters of the book that I wrote, Rinsed, the first chapter really talks about cartel drug dealing, street level drug dealing in the north of England. Now, that gang were putting in millions of pounds of drug cash, we believe, into cryptocurrency because they realized to go and get the drugs from Pakistan, which is where they were sourcing them from, it was a hell of a lot easier to send crypto than it was to bundle up the cash and put it in the post. Now, the tracing companies would have no idea about that. It was completely unconnected to crime. And even when it was exposed by the police and these people were arrested, the fact that those wallets had been tainted by that money still took a long time to feed back into crypto tracing world. So you're right, backward looking takes a long time to catch up and sometimes doesn't catch up with criminality, would be the other point I make. The third thing I'd say is that for the general public, you've got to realize adoption is changing. I mean, Tom's a little quick study yesterday at the Council of Europe was interesting. I think in the UK, I think we're up to about 10% crypto adoption at the moment. People have some crypto, some form of crypto to their name. So we are starting to see that change. So the general public might get more interested in these reports, but at the moment, it is really an inside baseball thing. And I think what really worries me is we have this tendency as journalists to believe that the bigger the number gets, the more attention we'll get. It's billions. I think it's the opposite. I think the bigger the numbers get, the wider the lens gets, the harder the audience struggles to follow it along. So in a way, these reports with these massive numbers in, these big headline numbers, don't help serve the public. The public wants to know, as I've tried to do, a story of a case involving a person and an amount and a thing, and then they can get the hang of it. Then they can absorb the big number. So those are broadly speaking the points I'd make about the crypto reports, but they're really useful. Do keep them coming if you're involved with them. I do. We read them. People do read them.
Yeah. I just wonder, I think what's important is I think there's a few sort of points to sort of wrap it together is that they have a utility and they're good for sort of hand railing some ideas about the industry. And like it's kind of like what the industry thinks about itself. But I would say too, it's not an indicator of overall health. I think that's what I would be very quick to sort of follow that up with. It's like it's very interesting and these numbers are they're big and they sort of help to put some things in context and perspective, but it's not an indicator of like health or unhealth. Tom, I think just picking on your point as well about your question at the Council for Europe, it's very interesting that you only had 5 people put their hands up. And what we've seen through our research, looking at like the informal markets, is that the crypto has a flavor. Like it's obviously a technology and a product, but it kind of has a social dynamic to it as well. It's something that's used by people in places. And if you're looking in like Western Europe and North America specifically, more developed countries, you'll find that it's very much around speculative investment and the price of, what Bitcoin is matters and what meme coin matters like a lot. And this is something that obviously is a big pressure on the services. What we've seen in other countries, so when we've looked at, developing countries in Africa, we've looked at developing countries in East Asia, Southeast Asia, we see a very different narrative. And for them, it's more about a remittance capability. It's the ability to move money cheaply, quickly, and in many cases, augmenting traditional financial systems. So when we sort of come to this, like your case about the UK is perfect because we've got a cash intensive operation, selling drugs is generally cash based still, although there is some on the dark web. But the proceeds of that crime can be converted into cryptocurrency and then remitted back to pay suppliers elsewhere. We know this is how people are paying for fentanyl precursor chemicals, for example, from suppliers. And we know also in non-illegitimate ways, we know that people are procuring equipment from wholesalers based in, let's say China or India using cryptocurrency because they're getting killed on foreign exchange rates. Like it doesn't really benefit them to try and, exchange Ugandan shillings perhaps for cryptocurrency, for dollars, because they get absolutely annihilated by it.
Can I
Go on,
just
Tom.
maybe one point to make? Because the most energizing moment of the discussion yesterday, and bearing in mind this was primarily a kind of human rights, democracy focused conversation, the most energizing moment was when somebody from Scandinavian countries said, okay, but how could we use this technology for good? And so to your point about financial inclusion and all these kinds of things, like how do you get money into the hands of those Ukrainians living in occupied territory right now, or those that are trying to rebuild businesses in Syria since a change of leadership there, or the opposition that's been attacked by the coup in Myanmar, these kinds of things. And so actually, I actually walked away from the meeting thinking, you know what? Yes, policymakers are going to be sort of nervous about, what all the bad stuff crypto is doing. But actually, what we need to do is find a use case that clicks in their minds. And I walked away from that conversation thinking, okay, if I was to invest time and effort in another conversation with these people, it would be, you should be funding the development of, the next M-Pesa, mobile money in East Africa, for example. What's going to be the next M-Pesa that basically makes the jump from traditional banking to sort of financial service that is fit for the modern era, for the smartphone, for the Starlink, whatever it might be. That could well be some kind of sort of stable coin, tokenized aid distribution. That's how I think you get people of my generation interested in the topic in policymaking circles.
It's interesting. I want to pick up, if I may, off the back of that, Tom. That was really interesting points again. But there is a geopolitical aspect to all of this that ties into potentially sort of illicit forms of finance, but also ties into your point, Nick, about the idea that there's parts of the world where cryptocurrency is seen as useful for remittance or useful for the financial services that would be expensive or unavailable otherwise. There are countries around the world that are quite miffed that the dollar has such power and that America's reach into the world through the system of the dollar is so impactful. And so I suspect those countries will be looking at areas, in the global south where cryptocurrency is taking off and thinking, well, yes, we can give these people services they wouldn't have got before, but we can also forge alliances and peddle soft power effectively in countries where we can effectively pull them away from the dollar, pull them away from American power and to a certain extent Western power, and pull them into different financial systems. And that's another way in which we can sort of get our influence going in those parts of the world. So it's important, I think, with those discussions around financial accessibility, not to miss the sort of maybe murky, shadowy picture in the background that there's a geopolitical game being played there.
Oh, 100%. And I think like we will talk a bit about those geopolitical games a little bit later on. I don't want to steal all the sandwiches too early, but I do think there's another thing that we also put here in terms of the financial inclusion side. And I think like when we initially started this conversation, I was like, what can I ask you two guys about? What sort of questions have I got? And one of the things that really struck me we're now talking about is this idea of, okay, financial inclusion as a solution to other forms of criminality. Like we know there is an economic link between crime, terrorism, and availability of money, right? Like people's inability to make money often drives them to forms of criminality, and not necessarily, it's not all necessarily motivated by entirely greedy purposes, but we do know there's a link between those things. And I sometimes think that, well, if there's an opportunity for someone to have a fairer for them system, then does this solve other strategic problems that we have got? But that being said, you have got that parallel track of, losing influence or being able to subtly introduce influence. The dollar is obviously the reserve currency of the world and has a very prestigious position for that. And you know what? I think I'll just talk a bit about like where this sort of came from. I remember a few years ago we were asked to look at cryptocurrency in a particular North African country, and they said to us like, "What does the market look like there?" And as we started sort of digging through, we found lots and lots of services popping up which were catering to users, and all of them were like former money changers, like Hawala sort of deals, and now a lot of them are now accepting cryptocurrency for tourists or for family members who, are diaspora or expat, working overseas and to send money back to support their families. So it does have a lot of opportunity there. But the other issue, we now introduce risks that maybe home finance institutions aren't so aware of. Although we can now perhaps manage the risk better using cryptocurrency or the technology of blockchain. I want to pivot a little bit and let's talk a bit about everyone's favorite rogue state, the DPRK. Geoff, obviously you spent a good amount of time looking at them, and I still remember speaking to you over a coffee and chatting about what they've been up to this week. And that initial question of like, well, where's the money gone? They've stolen all this money. Like, where did it go? Like, we're trying to figure that out. And we think we've got some ideas. And whilst the industry has sort of got better at understanding the mechanism of thefts, like the technical exploits and things like that, like what are we getting wrong? Like what is lacking from our understanding about the DPRK in general?
Yeah, thanks, Nick. Yeah, it's been I never thought I'd end up knowing as much about North Korea as I've ended up doing. And look, to be quite honest, since we're in a relatively private forum, I've been trying to get away from doing the North Korea beat for quite a while. And you just keep getting dragged back into it because every time you think they've peaked, they do something even bigger. Notably, as you say, almost exactly a year ago, the theft of something like $1.5 billion worth of crypto from the Bybit exchange. And what's been really interesting is looking at the evolution of North Korean attributed financial crime over the years and where it's gone. So we had the sort of quite famous bank hacking period, which I covered for the BBC series The Lazarus Heist, about the hack on Bangladesh Bank and attempted theft of $1 billion. Even around that time, though, which was 2016, a decade ago, they were starting to experiment around cryptocurrency. And from there, we saw really a big pivot towards targeting theft of cryptocurrency, but also cryptocurrency companies, the whole infiltration campaign that happened of actually getting inside these companies, which is still going on and has actually spread way outside the crypto industry. Then, of course, as soon as the money is gone, has been stolen, the task comes up of how you launder it, what you do with it. And obviously in crypto land, that's been a really interesting evolution as well. We know from the case back in 2022, which is a hack on a Vietnamese video game called Axie Infinity, theft of $625 million at that point. The money was large amounts of it were put into a crypto mixer, which took the crypto and mixed it with others' crypto and spat it out. And that was successful. As far as I can work out, the money was mixed and it is gone. It went through this system called Tornado Cash and we have no trace of it. Same, by the way, with the WannaCry attack back in 2017. As far as I can work out, the money goes into a sort of Eastern European crypto exchange and it's just gone. So North Korea's worked out that worked. Obviously, then you get the US government cracking down on some of these crypto mixers, Wasabi Wallet and Bitcoin Fog and Tornado Cash, the one I just mentioned. So then you start to get this moved in North Korea. Okay, well, where do we take the money then in that case? And what's interesting around that is that we've got this situation where, because of China's approach to crypto, there is a huge grey market around crypto around China and in countries bordering China. Huge amount of people in China who want to experiment with crypto, buy, sell, etc., but are forced into that grey market. Simultaneously, the growth and emergence of a really, really massive sort of Southeast Asian crypto scam community, which a lot of people on this webinar will have heard of, the crypto scam compounds and scam compounds, that creates liquidity. So, and I think, Nick, you may have made this point to me when we chatted. If you've stolen 1.5 billion from a crypto exchange, who's on the other side of the transaction? Who are you selling to? Well, you've got this very febrile, hungry market of people who want crypto, who are already working in a grey zone for it, and will happily, pay maybe over the amounts, over the odds to get it through those sort of grey channels. So that's where that money can go. The failure, I think, in the crypto companies, and Nick, we spoke about it, but you weren't the only people I was speaking to. Where did this money go? Where's the 1.5 billion? And the idea that we, even just tracing a bit of it somewhere would have been helpful. We didn't manage it, by the way, in our BBC podcast. We did a bonus episode about Bybit, but I'm still up for it. I still want to know, like, where did that money go? Where did that end up? And despite all the tracing, it just feels like there's this swamp now, which the stuff can drop into, where it just disappears out of sight. That's what it feels like.
Absolutely. Tom, the question to you then is like, where would you launder $1.4 billion of cryptocurrency?
Don't know where to begin. I don't know where to begin. I mean, I suppose the question I have is, work backwards. What is this money going to have been used for? And I think obviously the kind of hostile states around the world that are majoring on crypto have different aspirations. So if you're, North Korea, you have an economy which has pretty much cut off from the global economy itself. You're trying to get hold of material for your W&D program. So I guess I'd be trying to identify who are the likely sellers of those. Can you? I mean, I love the work that you guys do at Crystal and others, this kind of mystery shopping that people do to sort of try and get hold of wallet addresses and so on from people who look as though they might be up to no good. Then you've got people like the Russians, obviously, who are kind of setting up a whole parallel infrastructure to allow bad actors to do the laundering. So I just wonder whether we're starting to get a sort of symbiosis between, North Korea, lots of crypto that it needs to launder, Russia setting up this network of A7 payment networks, new exchanges. The Iranians are doing what they're doing. So is there, again, back to my earlier point, an awful lot of unknown? It's going on out there. It's just that we can't see it, and we haven't yet got the threads to pull on in order to map it out. That would be my hunch. Either that, or you do what Escobar and co did. You bury it in the garden. I don't know what the digital equivalent is of burying it in the garden, but that sort of parking of the money until such time as you need it.
Yeah, it's funny, the Escobar story. That was my first introduction to threat finance. All those years ago, back in I think 2013, a colleague of mine told me the anecdote that he was spending something ludicrous like $20,000 a week on elastic bands to wrap his banknotes up. Not such a problem with cryptocurrency, I don't think, but it's definitely there for the taking. And I think like your point too about like, well, look at the end state, like what does the outcome need to be and working backwards is actually really quite a critical point. And I know there are probably quite a few who work in risk and compliance listening to us now. And the idea is, okay, well, what do they want? They want to pay for goods and services. What goods and services do they want? And coming backwards from that is definitely the right way to look at it. And I think you also described, Tom, like almost like a perfect storm, a perfect sort of coordination of events. Geoff, you mentioned the fraud compounds in Myanmar and parts of Cambodia, and the links to the Prince Group, specifically a Hoi One Pay. Hoi One specifically was very interesting because it had received money in US indictments from DPRK related hacking funds. And we know that there were at least geographic proximities between the DPRK embassy in Phnom Penh and Hoi One's offices, like they were quite close to each other. So I look at this all and say, actually, they are pretty sophisticated in their approach. And one of the things that is often forgotten about cryptocurrency is anyone can become their own financial institution. Like you don't need to go and buy lots of expensive stuff. You just need a mobile phone or a piece of paper, right? If you've got a paper wallet, you need an internet connection and a phone, and you're good to go, and you can do what you need to. And I think that creates different challenges, which is, well, what happens if a bad actor creates a parallel infrastructure and then reports itself as positive? We saw this with shell banks. It's nothing new. It's shell banks in the 1990s, right? They were outlawed in many jurisdictions because of this very reason. Do we need to have, and again, crypto always feels like this, that we're learning the lessons of history just 10 times faster and pretending like they never applied to us in the first place? do you guys see a similar parallel with, it's old, new technology, old tricks sort of situation, or are we trying to reinvent the wheel too often?
Point I'd make is that yeah, you're right that there's nothing new under the sun, and that issues that come around in crypto, you can tend to see parallels in the world of traditional finance. Um, I think there's a couple of differences I'd point out. Number one is obviously the speed, as you talked about, because the crypto world moves on much quicker. Issues that would take a few years to come to the fore, like shell banks, for example, in traditional finance, can come up within a year, within a few months in crypto world. Another thing, and this is a point I've made before, and still waiting for somebody to tell me that I'm wrong on this, but what I find interesting is that the business of crypto, there's all these different companies. There's trading firms like yourself. There's obviously, exchanges, people like Binance and so on. But at the heart of it, the people who really, for me, run this and at the heart of it are coders, the people who actually write the software, who actually understand this stuff on a really granular level. And you can look again at Tornado Cash, that mixing service I talked about. It's basically created by three young men who just wrote the code for Tornado Cash and then published it online and said, there we go, it's out there. And so what I find interesting is there is increasing regulation around the world of crypto. There are increasingly big and valuable companies out there, with shareholders and investors and so on. But it's so vulnerable to being changed by just, a few thousand lines of code. And then suddenly your system is changed, your regulations all change. That's not the case in traditional finance. You can't just suddenly overnight code up a new bank, whereas in crypto land, you can code something up almost overnight. I think that's the big difference. And within those people, I feel that within those people, those coders, there's a very strong libertarian streak that says, this is new finance. It's meant to be new finance. It's not meant to be regulated in the way traditional finance was. So if you come in here and try and regulate us, that's anathema to everything we stand for. We're meant to be free of this. So there's this drive to kind of code your way out of tradition. And I think that's an interesting, it's a psychological aspect, but it comes to the fore every now and again in some quite meaty ways.
Yeah, I think it's interesting too, and again, just like maybe my own politics on it a little bit, but I find I understand where they're coming from in terms of the arguments, and like, I understand like the sort of the true believers, I would always refer to them as, those guys are very like that. But when it comes to regulation, nobody wants the police until the house gets burgled, right? That's kind of how the odd adage goes. But like, I guess to sort of follow on from that, Geoff, are we then over-regulating visible institutions whilst ignoring the informal networks? Like you mentioned that there's like this big sea of people who already work in grey market spaces. Are we over-regulating, the big services and things in the middle, which are super easy targets? Like it's very easy for me now to log into any analytics platform and say, look at all this bad money that this platform's receiving,
Yeah.
and say, look at how terrible they are at compliance. But in the meantime, we got to look at Occam's razor, right? Like the easiest path is generally the one taken. So the simplest explanation is the most likely. And in my experiences, we predicate a lot on big exchanges, but we tend to ignore the informal side. What are your guys' views on over-regulating the visible institution and ignoring the informal networks?
It's a good question. It is a good question actually, and it's not one that I've really dwelled on too much. I can see there's an element of unfairness of, well, you're coming after us because we are trying to be the good guys, and you're doubling down on that. But look, if I guess the idea is if you could have a rosy view of the future, the idea would be that those institutions that do engage with regulation and do go through those hurdles and do go through that pain can get bigger, can get more influential, can get more customers, and therefore can become the big players, and that the illicit places become smaller and smaller and serving smaller and smaller markets of people. Because let's face it, the majority of people in the world, I believe, are law abiding generally. And so, if you're hunting non-law abiding people, it's a smaller market. And the idea is if you can make your legitimate market big enough, you can really pin down and narrow down those small ones. There's a certain parallel to what happened after 9/11. There was this idea that the world was full of good banks and bad banks. And if you were a bad bank, the good banks would just turn their back on you. That sort of, financial warfare that got waged by the US after 9/11. I wonder whether that's sort of similar to where we're going now, whether countries like the US are saying, right, this is Wild West of crypto. We will draw a ring around the things that are good. And yes, if you're in the good category, you are going to get regulated. It's going to be painful. But woe betide you if you're outside in the bad world. I think that's maybe the play that's going on. I don't know, but I'd be interested in Tom's thoughts about that.
So I think it's important that we learn the lessons of the post 9/11, the post 9/11 era. I mean, so for those of you who haven't been bored by me before, I spent 20 years working at JP Morgan between 1994 and 2014. And so I kind of saw the pressure that came on the formal banking sector. Now, that pressure was entirely warranted because the formal banking sector, I mean, I don't remember the word compliance until well into the 2000s. And, I probably should have been paying attention, but we weren't sort of schooled and drilled in compliance until the big fines started coming. So, you learned by regulatory action was taken against your own institution, or you saw regulatory action taken against your competitors and thought, there but for the grace of God go I. I think nowadays we need to say, okay, well, what did we get right back then, and what did we overlook? And we clearly overlooked the informal systems until because the big banks were the low-hanging fruit. We overlooked the informal systems until we realized, well, hang on a minute, this whole illicit finance and terrorist financing thing is still going on, yet we think we're regulating the banks. So what else is going wrong? And there were various countries in the world that were facilitating those informal networks and all the rest of it. So I do think it's important to sit down and say, okay, lessons from that kind of post 9/11 era. And the thing that strikes me in the crypto world is back to Nick's point about, anybody can set themselves up as a, over the counter cash desk, if you've just got some crypto on your phone. And what worries me is that we're going to spend an awful lot of time focusing on the formal sector, in inverted commas, when it comes to crypto. And actually the volumes that could be moving, relatively speaking, the volumes that could be moving through the kind of the over-counter informal crypto world could really be very, very, very significant. And so, Nick, you and I have talked about this, but I find it interesting talking to people who walk the streets in cities around the world, whether it's in London, whether it's in Chisinau, Yerevan, wherever it might be, collecting the wallets of these cash desks and then doing analysis based on those. So we should learn the lessons from the post 9/11 era, not focus myopically on the easy, low-hanging fruit, the big exchanges. I mean, the FATF obviously has to some extent perpetuated this by saying, we will regulate the intersection between fiat and crypto. Well, sure, but what about all those informal intersections which don't get looked at? So I think we need to be careful not to lull ourselves into a false sense of security. We've got a great FATF recommendation 15, recommendation 16 score, but crypto is still coursing through the veins in a way that's uncontrolled because of this informal sector.
Yeah, I think that's a really good thing as well, because what we've sort of said at the outset was talking about financial inclusion and adoption of the technology to help promote this stuff. And I remember very much about Hawala, when again, a little while ago now, but when I first started hearing about Hawala and understanding this payment system, it was very much fact through repetition that Hawala was the nexus of all terrorism financing. Every cent or dollar that was raised by an extremist organization was probably going to be moved at some point using a Hawala, and that kind of overlooked the cultural significance of this. This is just how most of the Middle East and parts of Southeast Asia move money, right? This is how they move their money around. And I think we have an opportunity, as you said, Tom, to learn lessons from the past, which is, okay, don't get hyper fixated on the big exchange, understand the known unknown, which is the informal market. And then rather than just say with a big stick, you're all bad, get out, and kind of end up in the same situation, which would not satisfy the libertarians who don't want, consolidation of services upon, 4 or 5 big service providers. And again, when you look at the history of Bitcoin and cryptocurrency, the inaugural message being about Chancellor bailing out the banks. It kind of seems interesting that we've now got to a point where the market has settled amongst maybe 5, 6, 7 big institutions. 60% of the global volume through one. That's the thing that they didn't want, and it's now sort of appeared, and we kind of lose the point of that inclusiveness. But it's really challenging. And maybe to sort of follow on from that, a general perspective, is compliance too expensive? Like, at what point does it become, for a small service provider, is it just too expensive for me to want to be compliant?
Um, so I'm going to do a bit of an advert for someone who's not here, but if you read Oliver Bullow's new book, Everybody Loves Our Dollars, or Everyone Loves Our Dollars, there's a quote that he uses quite regularly in that, which is this kind of AML theatre. And I think we live in an age, particularly in the crypto world, where there's so much capability and capacity to sort of to trace and to investigate and so on, as we talked about earlier in the conversation. I think there is a risk again that we make the same mistake that we've made in the TradFi world, which is we drive the private sector to be so obsessed with keeping a clean nose and keeping the supervisor out of our hair that we don't actually focus on dealing with the proceeds of crime, the proceeds of the money that's for malign influence, the bad guys, the confiscation, all that kind of stuff. So I really, I think we need to have a conversation that starts with what are we trying to achieve? Like my favorite function in Excel is backsolve, right? What are we trying to achieve? And let's work back from that. And does that actually mean we have to have 17 compliance officers? Or does that mean that there's technology that could do a job for us or a different way of doing things? And so I think, the maturing of the crypto industry, I think gives us an opportunity to demonstrate what that kind of parallel universe of anti-financial crime, anti-illicit finance activity could look like, not simply copy paste ideas that were dreamt up by the Financial Action Task Force in 1989 or the Bank Secrecy Act in the United States in 1970 or whatever. I do think we need to have an honest conversation where we challenge the status quo on the basis of a jump in technology, which is what crypto represents.
Yeah, absolutely. I think it's an opportunity as well as a vulnerability, right? We do have the T as well as the O in that SWOT analysis to sort of pick up on. I guess I'll move on slightly, and one of the burning questions I think for a lot of people at the moment is A7A5, right? We've talked about this token, supposedly started by one of the co-founders of Garantex. It's a ruble-backed stablecoin. It's been sanctioned in the European Union, which is, I think it's the first token of its type to have that kind of status. We also see, setting up of smaller institutions across Russia and its satellites to try and allow that facilitation of things, just as you alluded to, Geoff. And at the moment, we do see it gaining momentum, like it's starting to suck up a lot of attention, not just in media, but also in, actual volumes and money. But what I'd like to use that for is an example of other schemes that have happened. And what people may not be aware of, again, a nice blind spot is that creating a token is not a particularly complicated task anymore. Like I know, Geoff, we talked about the guys who created Tornado Cash, but lots of people have worked to reduce the barrier for entry for creating tokens. It's all kind of started back in the NFT craze. If we all remember those days, it feels like forever ago. But now it's very trivial to create a token. And we've seen other actors who've since been sanctioned running their own tokens. So Zedexian, for example, had its own token, which was sanctioned by OFAC and moved a lot of money in connection with the Iranian state. We also know of at least one or two others that are related to a Russian drug marketplace where the masked voice talks about it, and he's created his own cryptocurrency token. It's got $250 million market cap. Like it's doing all right. What do you think the future has in store for this kind of schemes? And again, I do think that when we legislate for the last crime rather than for the next one, which I think is just a factor of things. But what do you guys think about the future for, these token sort of schemes? How do you think it's going to play out?
I think it's super interesting. I think it ties into, and I'm always cagey about sort of future gazing, because as a journalist, it's interesting, the whole futurology thing around journalism. It's very rare that journalists get called out on, what they got wrong last year, what they got right last year. But I do sense this thing, a sense of movement here. As I say, you've got 10% adoption, roughly speaking, in the US and the UK in terms of cryptocurrency. So already you've got a generation of people who, feel that a crypto asset is something they would have in addition to maybe some savings or whatever. The other thing you've got to realize is the people who are now 18 would have grown up in a situation post the 2008 financial crash, where for a very, very long period of time, there was really no point putting your money in a bank. I mean, it seemed like a bit of a mug's game, given that the interest rates were incredibly low, if any interest rates at all, which obviously then gets eaten away by inflation. So you've had this change in the sort of people's personal relationship with money. There's also this idea that I think people are willing to accept more flexibility in terms of stores of value. It used to be that you had money in the bank or under the bed and that was it. As I say, you've now got cryptocurrencies, you've got video game currencies, you've got, your Amazon wallet that you have, you've got credits in different places. So again, I think people's measurement of wealth is no longer measured in fiat currency. And, the more cryptocurrency gets embedded in people's lives, the more that will take effect. I mean, the Bitcoin spot ETF announcement from, I think that was early last year, means that, generations of people will now be able to, again, have crypto as their sort of basket of investments through their legitimate, financial advisors and so on. So, this adoption is happening. People are more willing to go there. And I think we have to start changing our perception in terms of what a store of value looks like. It's no longer your bank balance. There are other stores of value out there, other currencies out there, and they are gaining adoption. It's where I start to feel very old at this point in the conversation.
Just before we quit, I'd like to see Geoff go 3 rounds in the ring with like Mark Carney or someone who will say, this is the official definition of money and a store of value. So, but I think your point is an important one, which is that what people expect from a thing that they own has or is changing. Or it may be changing in certain parts of the community. Like if you own tokens in Roblox, I don't know what I'm talking about, but I've heard my nieces mention it. If you own tokens in Roblox, you can get something with that, even if it's, you couldn't actually buy anything in the real world. So I think the digital world has kind of created maybe a 4th dimension to the definition of money. And again, back to my Council of Europe example, when the policymakers are only operating in the first 3 dimensions, but you've got a growing community operating in the 4th dimension, we need to take note.
It's funny too, Geoff, you were mentioning about adoption rates as well. US and UK have, 10, 12%, I think, respectively. I think US is 18%, if I'm not mistaken, but I could be wrong on that number.
Fair enough. I read the 10% figure a little while, and actually I think in the US it was 12% at the time I read it, and that was a little while ago, so it could have updated then. But you're now more than 1 in 10 is.
Yeah, that's really interesting. So, like, you think it's big in America. In Iran, obviously a comprehensively sanctioned jurisdiction, very much in vogue at the moment, it's around 20%. So around 20 million Iranians. And that's based on domestic surveys and academia published by, Iranian media organizations, which I find quite interesting, right?
Yeah. And again, I'm in the UK, it's easy to look out at things with your UK, perspective on, but, we don't have massive inflation. We don't have huge government corruption. So again, we look at fiat currency in the UK, and some of the people on this webinar will look at it in a different way to people in other countries who might think actually crypto looks a lot safer than investing my money in the government approved currency. So there's that element to it as well.
This is a really interesting point, actually. And I think what it reflects is perhaps the biggest blind spot of all is that to understand cryptocurrency, you really need to understand the people behind it. You need to understand the social use case. You need to understand the landscape in which people find themselves. And I think it's very, it's very interesting to me, at least, how when we look at it, I said a lot of crypto media, particularly in like the research, and we go right back to those annual reports, is very focused from a Western European, North American kind of narrative around crime and criminality and adoption and use. But it's very hard to find those perspectives from other states. And again, like from our perspective, like we have staff members all across the Middle East. We've spoken to people in Africa. We have staff in Nigeria, for example, and their perspectives on crypto and the technology is very different to what it was when I first joined the company those years ago. And I think, going back to our idea of Hawala, right? We don't understand it because we don't use it, but that's the culture. You need to understand the culture to really get to it, because it is a product, but how the people feel about it. Mark Carney has a definition of money which is very rigid and robust, but you know what? You go and ask a guy who operates a bazaar in, Tehran, he might have a completely different opinion on what's valuable and what's not to him based on his needs.
I must say one of the most enjoyable bit of research I've ever done is when you might remember this, Nick, when ISIS decided that it was going to take down the satanic dollar, I think was what it referred to, and was going to it was in this incredible video where the Islamic State basically uh, was arguing against fractional reserve banking. I mean, you've got a terrorist organization discussing fractional reserve banking, which I defy most people to understand. But basically, it is banking as a confidence trick. Correct, it is a confidence trick. And so ISIS wanted to reintroduce, gold coins that were worth X and bronze coins and silver coins. Yeah. Now, it didn't take off, but the point, it was just fascinating to see an organization like grapple with what we all take as a fait accompli.
Yeah, exactly. And like the economic policies of ISIS was definitely something I enjoyed writing about all those years ago. And I do agree as well. Like you need to speak the language of the country, and I think one of the poll questions we had come up was how well do you understand the territory in which you offer products and services? And it's not a disrespect to anybody who doesn't understand everything about it. It's difficult to understand that, and time again when we've seen crimes involving cryptocurrency, particularly fraud, it'll be revealed at some point later that the person who deposited the money into a cryptocurrency exchange probably didn't have the economic means to justify why they had so much money. They were a laborer in a field or something like that, and they've got an account balance of millions of dollars. Now, they may be a savant investor on the side, and have some, strategy that we should all try and adopt and get rich quick. But, there needs to be a question asked. And I think that's the other challenge I think that services face is understanding, what's expected account activity. I think it's easy in traditional finance because, this job title has this salary or this location has this kind of income. It's probably easy to map those across. But it's probably more difficult with crypto because those economic models don't exist yet, I should say. And I think that makes it also quite a big challenge. I'm conscious of the time because we're going to have to go shortly. And it's been absolutely fantastic talking to you both. I think trying to get some final thoughts from you both, which is for the next 12 months, no, maybe let's not do the next 12 months. Let's do this one. Let's not be predictive. I don't want to upset Geoff and his journalist sensitivities. Just a general question, and it's a really controversial one. Does the private sector carry too much of the burden of enforcement and research in cryptocurrency and blockchain?
Okay. Oh, go ahead, Geoff. Go ahead.
No, Tom, you go. I'm still thinking.
Okay. So there is no doubt that if you do the pie chart of where does expertise, capability, etc., lie for combating illicit finance, the pie chart in the crypto world is much more heavily skewed towards the private sector than it is in the TradFi world. I think that's the first thing I would say, and I think with that comes some responsibility, and I think it's responsibility that the blockchain tracing community needs to be aware of. And whilst this is not a direct parallel, and I wouldn't want people to sort of say this is what I said, because I'm not going to say it as black and white as this. I think there are examples from recent history where the weight towards the private sector has led to some unfortunate outcomes. And I'm thinking in particularly the global financial crisis where we at JP Morgan and elsewhere were making all sorts of decisions based on the results that came out of models that were based on the credit rating agencies. And we kind of took what the credit rating agencies said at face value until it all went wrong. And so I think there is no doubt that the importance of the blockchain tracing community to all but the most sophisticated governments around the world means that we are going to have to think about how we make sure we have checks and balances to ensure that kind of missions are aligned in some way. I'm not saying that the blockchain tracing community should be supervised, to be clear, but I do think we just need to be sensitive to the fact that a lot of people may turn around over the next 5 years and say, oh, but I was using tool X or tool Y or tool Z. And whilst it may say in the small print, you can't rely on our tool, blah, 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 the fact of the matter is that people do rely on the tool. And we don't, I think, want to get into a situation where that reliance becomes kind of blind entirely blind. I mean, I'm also taken back to, I remember when I was doing my King's College Masters on terrorist financing, and I interviewed one of the banks, and they said, all these negative media screening tools, we don't use them because we don't want to know things. Now, very quickly, that went from we don't use them to we have to use them because the supervisor requires us to. But I think, there are lessons from the past we can learn as to how great innovations in the private sector become overly relied upon by others in the private sector or indeed governments. And that doesn't necessarily end well. So I think if I were in the blockchain tracing community and being responsible, I would sort of have some kind of conversation amongst ourselves, cartel laws noted, to try and make sure that there's a kind of code of conduct or some sort of engagement with government that avoids that position that we've got ourselves into before, where private sector innovation has ended up not necessarily where everybody intended.
Okay. That's a great response, Tom. I would just say yes. That's
Yeah,
very good.
at the risk of being an agreeathon, yeah, I would agree. I think, Nick, to your question, Tom, to your point, there is crypto world is very different to traditional finance world, and there's so much private industry involvement, and that's where the running is made. And if you're sort of huffy about having to take enforcement seriously, be careful what you wish for, because if the private industry gets too huffy about taking enforcement seriously, there are public sector institutions that will come along and help you do that job in a way that you wouldn't want to do. So yeah, I agree with Tom in terms of the best way to avoid awful legislation is to do something about the problem that you're being presented with. I would compare the social media companies to that at the moment. Had they got a grip on the insane attitude they had towards children for the last few years, they wouldn't be facing bans on under 16s use of social media. They didn't. They took the money and now they're losing it. So a cautionary tale there in terms of how private industry sort of polices itself.
Yeah, I think that's actually a really good model to talk about. And I think on that note, I'm sad we have to sort of close it. Um, just to sort of summarize, we've been around a lot of things today. We've talked about tokens, we've talked about North Korea, we've talked about crypto and lots of other things. Really, thank you so much, both of you, for your time. Really, really enjoyed talking with you today. And thank you all very much for your attention. See you all soon. Thank you.
Thanks for having us.
Bye.
Thanks
Bye.
all. Cheerio. Have a great day.